All right, let's calm down for a second and introduce who we've got and tell us what's going on. John Layfield, of course, still with us. Scott Martin joins us, and Ash and Liz with us as well, of course. I'm inclined to say to you, first of all, Scott, so much for the Santa Claus rally. Forget about it, right?
Well, it's hard to find him right now, that's for sure. And by the way, Stuart, rarely do people say, let's calm things down and go to Scott Martin. So I appreciate that notion. I'll tell you guys, I mean, it looks like, again, to quote the erudite Lloyd Bridges, I picked the wrong week to quit drinking. Because to your point, as he said on Airplane, that great movie back in the late 70s, early 80s, is that, you know, right now, Stuart, the market psychologically, Santa Claus rally or not, seasonal rally, anything that we've seen from the midterm elections and the recent Fed notes tell us that the market is not really paying attention to fundamentals. And to me, that's a point that we're going to get through. But until we do, the fundamentals and what maybe the Fed does, even a trade deal, as we saw that we didn't get, obviously, earlier this week, doesn't seem to matter other than a few hundred points and say the Dow only to be reversed. So the market psychologically is broken right now. It's off its medication. That's going to take some time to work through.
Okay, now, is the main reason for this big sell-off the arrest of the Huawei executive? Is that where it's all coming? Is that the main reason, John?
I think it started with the "I'm a tariff man" tweet by the president, and then this has led to further exacerbate the fallout.
Part of many moving parts. I think there's a real concern going into 2019. The global economy is slowing down, and ultimately that's going to catch up to the U.S.
And I think you guys are all right. And to your point about algorithms and robots, we're going to get dramatic V-shaped action. Why? Because when the news feeds come in and when the S&P 500 breaks down below the 200-day moving average, the algos start selling the very broad-based liquid ETFs. And they're broad sectors in those baskets of funds, and it drags the market down rapidly.
And we're down nearly 500 points. And I have to think that the algorithm trades, they've kicked in.
They feed on themselves, yeah.
Spiraling down, okay. Now, with all these headwinds and the market sharply lower, whether it's China trade, interest rates, you name it, are there any groups of stocks, is there any industry which you think, Scott, could avoid all this big sell-off? Any group that you can name?
Yeah, there's been some silver linings to the dark cloud, Stuart, and that's utilities. I'll tell you, you know, we've owned utilities. Even we bought them probably a little too early towards the end of the summer, just because of the fact that they were behaving well from a correlation standpoint, meaning how they were acting vis-a-vis other sectors that are out there. The other one is gold. We kind of got lucky, I think, on gold, Stuart. We don't have enough, obviously, because, you know, some of the portfolios are still suffering with the markets as they are. But as you remember, before the elections, we were concerned about just maybe not so great outcome from the elections, the midterms. We were worried about a bad market reaction, so we added gold in our portfolios. GLD is the ETF we own now. Gold is providing a nice, again, non-correlation value, non-correlation to equity markets right now, and that's a place to hide too.
Okay, John, how about dividend-paying stocks? Earlier I mentioned AT&T. Right now it's at $30.46 a share. It yields 6.8%.
Yeah, you also have Verizon, which has a great yield. Also, you have your big oil tech companies, which yield a great bit. A lot of people go into a safe harbor. One of the problems you had was the dividend trade came off when rates started going higher. So you started seeing some money come out of these dividend stocks. Look, any recession, anytime there's trouble, entertainment and booze does well. It has always done well. They say it's recession-proof. I think it's the same thing now. But how do you get your entertainment now? A lot of it's social media. A lot of it's your video games. I think Activision, I think right now is a good buy. I think Facebook is going to end up being a good buy.
Okay, we've come back a little bit. The low of the day was minus 480. Now we're minus 384. Individual stocks, here we go. The grocery store chain Kroger, revenue up. Same-store sales falling short of what they expected to see. The stock is only down 23 cents, $28 a share. Children's Place lowering its outlook. If you do that, your stock goes down. Case in point, Children's Place down 17%. Let's get to the price of oil. I think it's still at $51 per barrel, down about 20. There you go. OPEC reportedly has agreed to cut production by 1 million
Although that's
barrels
open. That number could change.
It could.
There's a number, and they're not going to be tied down as OPEC tends to be.
And we've already heard from John, who says low, cheap oil is not good for the stock market. Maybe good for the economy, but not for the stock market.
Good for the economy, but once you start getting around $40 and below 50, it hurts the stock market.
Here's what's good for everybody. Gas prices. Show me, please. Well, we're at $2.44 a gallon, down only a tiny fraction overnight, but down nonetheless. That means we're off. Down for 57 straight days. Got it, 244. A who's who of big tech executives meeting at the White House today. The discussion will focus on technology and industries of the future. Who's going to be there, Ash?
Safra Catz of Oracle, Farnham Jahanian of Carnegie Mellon, Steve Mellenkopf of Qualcomm, Satya Nadella of Microsoft, Sundar Pichai of Google. Ginny Rometty might be there too, also from IBM. It's unclear if President Trump will be there. He's not listed, but you never know with the president. He could stick his head in the door and have a few comments. But as you say, talking about technologies and industries of the future.
And Mark Zuckerberg not there, right, Ash?
Well, absolutely not there. But it's also seen as trying to ease the tension between the administration and the tech industry.
I do hope that President Trump goes to the meeting and confronts the leader of Google, Sundar Pichai. He is going to be there.
Yes.
Because Pichai, Google proposes a censored search engine for China, which I think is unbelievably bad taste, bad politics. I think it's a disgrace. You don't give a search engine to China, which they can then use to censor 1 billion people and follow them and arrest them. You don't do that.
I agree completely. Google is looking at the greater good argument. Do we do what's right for our business and try to get into China by any means necessary? And right now, at least, they've said yes.
Yeah. We got a lot of more bad publicity for Zuckerberg and Facebook, stuff coming out of those emails that have been released by the British. Scott, I don't know whether you own Facebook or whether you used to own it and you've sold it. Where do you stand on Facebook at 135?
I wish I used to own it, but I still have it. Now, some of that's lower basis. I mean, frankly, Stuart, some of that's in the high 70s, believe it or not. Now, we barely paired off a little bit when it got, in the 180s and started falling, but we didn't take off enough. But I agree with John. I mean, I think Facebook is appropriately valued given what its stature is in the social media world, that it will come back. The problem is with these social media companies, as you guys just noted, and you cover them, whether it's Google, Twitter, some of those other guys, they've been massively smoked on this downside. So what that means is for them to recover, it's just going to take a little while longer. But I still believe in Facebook. I still believe in Zuckerberg. And therefore, we're still hanging on to the stock here and probably going to add to it once all this malaise calms down that I talked about previously.
All right, let's move on to Boeing. More problems there related to the Lion Air crash in Indonesia. Tell me the latest.
Coming out of the Wall Street Journal that Boeing omitted safety system details and minimized the training for that crashed Lion Air 737 jet that killed all 189 passengers off the coast of Indonesia in late October. Here's what's striking about this story. Gordon Bethune, who ran Continental and was at Boeing at one time, said they dropped the ball. Why? He was saying that Boeing, in the operations manual, basically relied on the idea that you just shut the system off with a switch. The pilots apparently didn't know to do that and fought that plane more than 24 times in the 11 minutes prior to the crash. From the get-go, they were fighting that plane. It was pushing that nose down to avoid a stall speed. Incorrect sensors put it in that mode. Why wasn't Boeing pilots trained? That's the question of the hour right now.
Well, Boeing's stock is reacting to that and the fact that it's a trade-sensitive stock and it's down $11, 3.5%. Roller coaster week for stock, got that. The jobs report comes out tomorrow. Do you think? Let's go around the block. John? I think it's going to be a fairly strong report, 200,000 jobs plus. Will that put a bottom under the market?
I don't think so, because we have a bottom right now. This Christmas looks to me like to be the biggest Christmas in history. We have low unemployment. We have consumer confidence, 18-year high. Wages are up. We have great things to buy from the big tech companies. I think we're the biggest Christmas in history. Apple could have a $100 billion quarter if they exceed their $93 billion top-end revenue estimate. However, it's what happens going forward, and that's what people are worried about. People are worried about Brexit. People are worried about the trade war. People are worried about rising interest rates.
Brexit. You just mentioned Brexit. Now, you're going over to London.
I am.
You're going to be reporting on this.
Yes.
The vote is Tuesday, I think.
It is. They're in the middle of the debate now, and it still does not look good.
The debate is whether the British House of Commons accepts the deal that Theresa May has worked out.
Right.
You just speculate with me for a second, Ash. Let's suppose the vote goes down to defeat.
Right.
It's rejected.
Right.
Any idea what happens?
Well, Parliament has now given itself the power to step in and decide what to do. What happens, what they're trying to avoid, is what they call crash crashing out, a hard Brexit. You just leave on March 29th of next year with no plan in place. World trade rules will go into effect, but that would be chaos. It would be a shock to the financial system. They're trying to avoid that, but boy, it looks at this point as though this deal that Theresa May has put together is not going to pass.
What happens to Theresa May?
Well,
Sorry.
her future is very much in doubt.
I'm really interested. I know it's speculation.
Yeah.
But let's suppose the Brits crashed out
Yeah.
of the European Union. They've got no deal. They're out.
They're just
gone.
out.
Then what happens to the European Union? You want to speculate on that
Absolutely.
for me?
I think Italy drops out. If England drops out,
it's
and
over.
the EU is done.
It's
It
over.
won't happen
So the
right away,
pound-
but it's going to happen
Well,
shortly. I think Theresa May ends up getting a no-confidence vote.
Right.
The worst case is Jeremy Corbyn takes
That's
over.
what markets are
which
worried about.
Would be
And
horrible.
then these individual countries print their way out of their own crises to
Absolutely.
save their
Yeah.
banking
Sell the
sectors.
pound,
Is
sell
that
all
it?
the
Wait,
currencies.
hey,
You're righty, Mac.
Scott, I want to bring you into this, but I have the question. If the Brits crash out, if Brexit, they just crash out, do you think that leads to the collapse of the European Union itself? And if that is the case, then what happens to our market?
It'll put the European Union at the biggest risk since we saw the Greek crisis and some of those other pigs. If you remember those, the fringe countries that had all the debt problems, it'll be their biggest crisis they faced since then. Stuart, here's the financial aspect of that. If that's going to happen, or even leading into that, I don't think it's bad to even think about it this way. You got to start selling the British pound, and frankly, ironically, even the euro. And that means the dollar is going to rally on that news, which is really bad for all our S&P 500 companies. About 50% of the revenues by which are from overseas activities, of which the dollar works against as it goes higher.
Bottom line, European Union collapses, terrible for Wall Street.
Terrible. A shock.
We pay a price.
Yeah, we're all interconnected, to Scott's point. So much revenue generated overseas, the dollar yeah, it's not good.
And you'll be there to cover it.
Oh, yes.
Right, thank
Be
you,
interesting.
Ashley. It's that
Good luck,
time. Got to say
Ashley.
thank you to everybody. Scott, John, great stuff this morning, and we appreciate you being here on a very difficult day. Check that market.